Who wouldn't want to reduce the amount of capital gains tax you pay by around about 30%? I mean, the whole point of investing in property is to make a really large capital gain, of course, and to keep as much of that capital gain as possible. And today what I want to do is share an idea with you on how you might be able to do that. So let me start by talking about owning property inside a company. And most accountants would recommend against it. And there's two factual reasons for that. Firstly, a company doesn't benefit from the 50% capital gains tax discount. So we know if we own an asset in our personal name or inside a family trust, and we sell that asset and make a capital gain, and if we've held that asset for more than 12 months, we get to discount that gain by 50%, which obviously reduces the amount of capital gains tax we pay. Secondly, if a company makes a loss, that loss is trapped inside that company. So you don't get the immediate benefits of negative gearing. Now, of course, if we go and borrow to invest in a company, it's very likely that the total revenue, net rental income, won't be enough to pay for all the expenses, including interest on any loans. And therefore, it's going to make a taxable loss. We would like that loss in our personal names to offset other income, that is, maximize negative gearing benefits, as opposed to having it trapped inside an entity. Sure, you can carry it forward and use it in future years, but you want the value today. So they're the two reasons that accountants mostly recommend, don't invest through a company. But today I'd like to give you an idea on how you might be able to do that and still maximize your negative gearing benefits, but minimize or save about 30% in capital gains tax. Because after all, the whole benefit or aim of investing in property is to make a huge capital gain. So buy a property, hold it for 10, 20 years, whatever it might be, sell it, and then hopefully make a huge capital gain. And so the goal is then to keep as much of that gain as possible, pay as little as possible to the Australian government. And that is, obviously, minimise capital gains tax. So all of this is explained in the link associated with this video. But essentially what you need to do is firstly raise the money in the company. And the company will do that by selling you shares. So you go and borrow to buy shares in this company. So if I issue 1 million new shares for $1 each and you pay $1 for those shares, of course, then the company has raised $1 million. It can now go off and buy a property. When it does buy a property, it can pay a dividend to you, which is the rental income. And because you borrowed to buy the shares, you'll have that interest deduction in your personal name. So the negative gearing benefits are preserved. But the other benefit is that when it makes a capital gain, sure, you don't get the 50% capital gains tax discount, so you will have to pay 30% tax initially. But the benefit is that you can pay that gain out as a dividend and spread it over many financial years. Whereas when we own property in our personal name, we have to go and sell it, we'll make a big capital gain in one financial year, and there's very little we can do to minimise the amount of tax that we pay. And so then therefore the benefit is that if I'm in a company, I'll get a credit for any tax the company pays, pay a dividend out over the next, say, 16 years, and spread that gain over many tax years. And in the example in the blog, as I said, the link is in the comment section, the example in the blog shows that I could save around 28% in capital gains tax by doing that. So I get the negative gearing benefits and I save on capital gains tax. Is something worth considering. Not for your whole portfolio, of course, because there's pros and cons with all ownership structures, but if you're going to invest in several properties, maybe putting one in a company name makes a bit of sense. Anyway, if that's of interest to you, I hope you'll check out the blog. As I said, the link is in the comment section. And if you would like to learn more, please subscribe to my channel on YouTube.